What's good, family? What's good, family? What's good, family? All right. This Zoom training is going to be strictly over SRT, support, resistance, and trend lines. All right. If you're not able to make my call on Thursday, I'm here making this call for y'all so y'all can save it because I forgot to record it. So I'm making this recording now. All right. I'm going to go over exactly everything I went over on Thursday to the best of my ability, the exact same way. It's going to be the exact same thing. So please watch this video in its entirety to truly understand the importance of SRT at the end. All right. So I'm not going to take too much time. I'm going to go right into it, and then we're going to start from there. All right. First thing I'm going to do, share my screen. Okay. Y'all should see my screen now. Y'all see it. Boom. All right. I'm going to go over the definition, my definition of support and resistance. I'm going to go over support and resistance first. All right. So support, I deem it as a floor. All right. This means that price has an issue or struggles to break below a certain price level. All right. Resistance to me is like a ceiling. This is like a cap as to how high the market can go for a specific currency pair. That means price struggles to get above a certain price level. All right. That's my basic definition of support and resistance. All right. I like to categorize support and resistance as a magnet for the market. Okay. Price will never linger just in between support and resistance for no reason. It is always going to be attracted to the closest support level or the closest resistance level. Okay. In order to find out what these levels are, you got to understand something called top-down analysis. All right. Top-down analysis is starting at higher time frames and working your way and working down to lower time frames. All right. That is top-down analysis. Now, top-down analysis depends on the type of trader that you are. All right. There are three different types of traders. You have the scalper, you have intraday, and you have swing traders. Those are the three different types of traders. Okay. A scalper, right? I'm booted like this. Oops. Works usually from as little as the 5 minute or even the 1 minute. I say the 1 minute to the 15 minute time frame. TF stands for time frame. All right. Intraday, usually 15 minute to the 1 hour, sometimes 4 hour. Time frame. All right. And then swing is usually 4 hour to 1 day time frame. Usually. Sometimes you can even put the week or even the month on there. All right. Those are the three different types of traders. Now, top-down analysis for a scalper would mean you starting off on the 15-minute time frame, marking up support and resistance, and then going to smaller time frames. So start at the 15, then you go to the 5, then go to the 1, or even the 3. Okay. Intraday, you start at the 4 hour time frame, maybe even the day here and there, right? And you work your way down. 4 hour time frame, 1 hour time frame, 30 minute, 15 minute. All right. And swing trade, you can start from even the week, day, 4 hour. All right, that is top-down analysis. The reason I say that is because larger time frame analysis holds more weight than smaller time frame analysis. Okay, larger time frame analysis holds more weight than smaller time frame analysis. And that will always be the case. So you got to understand yourself. If you're somebody who has the patience and the capital to work with swing trades, meaning you're risking more pips, but you're looking for larger gains in the long run, it's just going to take a little bit longer. You understand you're going to have to look at support and resistance on the daily, on the weekly, to understand where the market can truly go. If you're a scalper and you're just trading within an hour, like an hour session or whatever, you got to understand the pattern for the day, the trend for the day. You can get that off of the 15-minute. What's the high of the day? What's the low of the day? And work your way down to 5-minute, 3-minute, 1 minute to get an ideal entry and catch the momentum of the market. That's how top-down analysis works, okay? Now, the question that's going to come up next is how do you draw support and resistance, all right? I'm going to say this now. Please disregard my drawings. It is not going to be the prettiest thing in the world, but it will make sense, all right? There are 3 types of support resistance. I'm going to call it SNR. SNR is support and resistance, okay? You have gap, you have overlap, and you have perfect touch, okay? You have gap, overlap, and perfect touch. So pretend like this is just a support resistance line, okay? And I'm going to draw this out. Say that you have a downtrend right now, okay? And price comes almost to your support resistance line and then goes up, all right? This is what we like to call a gap, all right? Price did not come to your specified area, but it came close and went back to the upside. Say you got an uptrend doing the same thing, gap, and then decides to go to the downside, all right? There's something else I want to add in here, all right? Support and resistance, for me, requires at least 2 touches. It requires at least 2 touches, okay? Boom. So what does that mean? If you're looking for support, that means price has to at least touch the same price level at least twice before going back to the upside. If you're looking for resistance, this means that price has came up to a certain price level at least twice before continuing to the downside. All right, now going back to this is the gap example. All right, the next one is the overlap. Say that you have a downtrend, okay? Boom. This is when price goes past your designated price level for support. All right, this is for the buys, but continues to the upside like you anticipated. All right, same thing for an uptrend. All right, price overlaps your resistance level, but continues to the downside. That's an example of an overlap, okay? The next one is the perfect touch. Downtrend, but price hits exactly where you marked your support level at and will continue to the upside. Same thing for an uptrend, right? Came exactly where you put your price level at, continue to the downtrend. Now, those are the 3 different types of support and resistance. This is what we like to call, and this is why you'll hear this terminology. You'll hear this supply and demand zone, which equals support and resistance zones. gonna call it S&R zones. Okay. This just means that once you start determining what type of support and resistance this is, you can mark this up through a zone that you know price is going to respect based upon the gap, right? So if you have a gap and then you start seeing price do this, you know that price is going to respect and consolidate within this level, within this zone, right? So if you know price hits the top of this zone, continue to the upside. But if you see price come into this zone and maybe even touch the other side of this zone, you're just waiting for candlestick confirmations or other confirmations to say like, all right, this is just an overlap going to the upside. Or even for this example here, you see that price came into the zone, but it respected it. It respected your support and resistance line. You're waiting again for confirmations, candlestick patterns, to tell you which way is it truly going to go. All right, this is why I say support and resistance is the basis for any other trading that you decide you're going to do. You can mark up market structure, okay, and it's going to make everything else a lot simpler in the long run. All right, and that's the 3 different types of support and resistance. All right, now how do you draw this? Right, how would you actually go to a pair and actually look at this? If you don't know about the line chart tells the true story of the market. The line chart does not include the wick. All right. If you don't know about candles already, if you don't know what the candle body and the candle wick, open, close, all that is, you need to make sure you go to IM.center and understand what a candle body is, a candle is. Okay. But as far as the line chart goes, the line chart tells you where the candle opened and where the candle closed. All right. This is like the true movement of the market. All right. So say for support and resistance, for example, right? Right here is actually a good example of a multitude of things. You have, right, at least 2 touches. But in hindsight, you actually have a perfect touch in a sense and a gap, okay? Prices came around this certain level and respected it on multiple times. And this is where the zone comes into play. You mark the zone from where your gap is to the bottom of where price is, and you see exactly what price has been doing. Overlap, came back up, perfect touch, came back up, and now price is back into this area. This is a perfect example of support and resistance being a magnet for the market. USD JPY closed on the support level. It did not stay in some random space somewhere. It came right back to the support level and closed. And now it's waiting to be open tomorrow night, Sunday night. Okay. This is the line chart, right? So say I go back to the candles. You start seeing where wicks come into play. You start seeing that wicks come into play. This wick came close to where your price level is at, right? You see the wicks are playing around the support level. And if you go back to history, you see where price was a resistance before it became a support. Overlap, well, perfect touch if you look at the line chart. And then continue to the downside, right? The wicks, if you don't understand wicks right now, the wicks will tell you the story of what the market makers are doing behind the scenes. All right. The wicks are usually when bank plays come into play. This is when stop losses might be hit and then continue to the direction that you anticipated, right? This is just the market makers getting their money back, making some money real quick, and then allowing the market to move in the direction that it's supposed to be moving in. All right. That's why I moved to the line chart. The line chart tells the true story behind the market. Okay. Now, after all this, right, you understand support, resistance, top-down analysis, 3 different types of traders. larger time frame, 3 different types of support and resistance, and supply and demand zones. Okay. The next step is trend lines. Okay. So I'm gonna clear all this. And the next step is trend lines. Okay. Trend lines will tell you the current trend in the market. Okay. Current trend lines will tell you the current trend in the market. You need at least 2 to 3 touches for a valid trend line. Okay. But before you even get to a trend line, you might be asking yourself, how do I determine the trend? All right. So no matter what time frame you're looking at, no matter what type of trader you are, okay, the market moves in a patterns of ups and downs, higher highs, higher lows, lower highs, and lower lows. Okay. I'm gonna go over the uptrend first. Okay. This is an uptrend. Okay. This right here is a uptrend. All right. Now, terminology used for an uptrend is what we call higher high and higher low. H8 equals higher high. HL equals higher low. Okay. Now, I'll just move this to the side. So when you first establishing a trend, you might have a higher low, right? Pretend like you were in a downtrend before all of this, and now this high has been created, right? This is what we call a higher high. Higher high means that this high is higher than a previous high. All right. Control CB. This high is higher than the previous high. This high is higher than the previous high. All right. Those are higher highs. Higher low, it just means that this low is higher than the previous low. Okay. This low is higher than the previous low. This low is higher than the previous low. Okay. And this is what an uptrend is. It's just a series of higher highs and higher lows within the market. All right. If I had to point out an uptrend right now, what do we see here? You see higher high, right? You see higher low. You see higher high. You see higher low. Then you see higher high, right? And this is what we call a uptrend. All right. No matter what time frame you're on, you will be able to determine higher highs and higher lows. Okay. Now, this is a uptrend. I'm gonna put this right here. Okay. This is an uptrend. A downtrend is just the exact opposite. All right. All right. Remember, higher high, higher low. Okay. The next one is LL and LH. LL equals lower, lower low. LH equals lower high. Okay. Come back over here. Lower low just means that this low is lower than the previous low. Okay. Lower high just means that this high is lower than the previous high. Okay. So lower high, lower high, lower high. Okay. Lower low, lower low, lower low. Okay. And this is a downtrend. This is a downtrend. Okay. And this is all you need to know for uptrend, downtrend. Uptrend, series of higher highs and higher lows. Downtrend, series of lower lows and lower highs. All right. And you can use this knowledge to now find trend lines. Okay. I'm going to go to a different pair just to show you that it works on a different pair and larger time frames. Okay. I'm going to get rid of my stuff so it's not overwhelming y'all. And clear this. All right, boom. All right, I'm going to go over the downtrend first. Remember, this can work on any time frame. Okay. For a uptrend, remember, I said a trend line is at least 2 or 3 touches. All right. And I like to use the line chart for trend lines too. Okay. So what do we have here? We have a uptrend. Right. We have at least 2 touches. And you can apply the same rules of support and resistance to trend lines. There's going to be some gaps. There's going to be perfect touches. And there's going to be some overlap sometimes. All right. This is a uptrend. Touch, 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 continuation. All right. If I go back to the candles, what does the wick say? You had a wick and a wick. The wicks tell the story of where the market, of the market makers and what they're doing. But the overall trend of the market is up. And what you come back in here, let's see. You have higher high. You have higher high each time. Right? Higher high each time. So you get all the way up here. Right? Then you have higher lows. Right? Higher low. This low is higher than the previous low. This low, I'm gonna actually make this one 1. This whole thing is 1 higher high. Okay. This higher low is higher than the previous low. This high. Then you have this higher low right here. All right. And then continue. Higher low. This is kind of consolidation. So the next higher low will be right here. Next higher high will be up here. Next lower low, higher high. Now, this is a uptrend. Okay. That's how you determine trend of the market, and you always trade with the trend. Don't ever trade against the trend. If you see a uptrend, only trade uptrends. Don't go in for only trade buys. Do not go in for a sell if you see 3 touches. Do not go for a sell up here. The sell is not guaranteed. This buy was definitely guaranteed. Hence why all of this happened. Okay? And that's a uptrend. All right? A downtrend is a perfect example right here. All right, go back to my line chart. All right, and draw my trend line. What do you see? Perfect touch, a little bit of a gap, touch, touch, touch. This is at least 2 touches. You get about 5, 6 of them. This trend is pretty strong on 1 hour. Okay, but remember what type of trader that you are. Remember that top-down analysis. The trend lines that you find on the higher time frame, depending on the trader that you are, is going to hold more weight than trend lines on smaller time frames. Please remember that. Okay. You go back to candles. What do you see? A little bit of a wick, a little bit of wick. Nothing too crazy though. Hence why after this last touch right over here, continuation to the downside. All right. What you get here? You have lower lows and you have lower highs. Right? This right here, it's a lower low. This right here, lower high. I really don't count both of these right here because it's still consolidation. Lower low, lower high, lower low, lower high. So this one right here is a lower low, lower high, lower low, boom. Then you have lower high, lower high. Lower highs right here. And you have the latest high, which is right here. And it never got above that high and just continued down. And you can even say that you still see the downtrend because of what? Right? You still got lower highs, it's consolidation, so I'll count that as 1. And you still have a lower low. This high never crossed this high up here. So what you expecting? Still downtrend. What happened? Lower low, consolidation. This high never got any higher than right here. Lower low, lower high, lower low. This would have been new high on a larger time frame. Hence, when the real uptrend started happening again. This is on a larger scale. You will see this more in the 4 hour. But that's how you establish the trend. Okay? Now, you can partner support and resistance with trend lines. Okay? I'm going to show you exactly. Say that you see this trend right here. Okay? Say that you see this trend. If you go back to the line chart and mark up support and resistance, right? You first see support, 1 touch, 2 touch, overlap, right? And you could mark this up right here. 1 touch, well, long touch, another touch, little gap. This is what you call your zone. This would be your supply-demand zone on a 1 hour. Price was playing in this area twice before breaking out, retesting, making this level of support, right? 1 touch or overlap, perfect touch, sell. Gap, continuation to the downside. That's how you sort of use support and resistance on top of trend lines. This is just another confirmation. Once you have these 2 touches and this resistance lined up with the trend line, you have this touch right here, right? This is just another confirmation to get in on another entry point, continuing to the downside, right? You can even mark this down here. You are marking this based off of this resistance. 1 touch, 2 touch, it now became a support. Price came back to this level and broke through. It touched 2 times as a resistance and never broke through and continued on the downside, right? This is a zone right here. This is a zone, all right? Then I'm gonna add a little sauce to this and tell y'all this. Supply and demand zones usually result in consolidation. Okay. Now, what does that mean for us? This means that you're not taking trades from consolidation. You're waiting for the continuation to either the upside or the downside based on your other confirmations as well as candlestick patterns. Okay. This right here tells you we're in consolidation, waiting for the move. You go back to candles, what gives away the move, right? This candle right here. This candle right here. If I put this rectangle right here, and then I go to smaller time frame, remember, top-down analysis, and I scroll back and see what's going on in the 15-minute, right? What do you see? You see prices respected is ranging in between two levels right now, right? It finally broke off of this candle. Right? This candle right here really signifies the push to the upside. And now I'm going to show you these two candles right here. I'm going to zoom in more so y'all can see what I'm talking about. But these two candles is a candlestick pattern. All right? You had a breakout followed by a retest. Okay? If you are a part of I Am Academy, you need to watch Christopher Derrick if you want to understand supply and demand zones a whole lot better. Christopher Derrick teaches price trap. Price trap is literally support and resistance with supply and demand zones. He literally waits for a breakout, a retest, and continuation. All right. He does twin trading. He has rules when it comes to stop loss and take profit. Takes 20 pips, be done. Okay. That's a little more advanced. But this is a candlestick pattern. This is what we call a bullish engulfing candlestick pattern. Soon as you see this, you get in off of this candle, you are up. Soon as you see this candle, you can get in and you have been up at least off of this run, 45 pips. Yes, you would have had a little bit of drawdown right here. You had about 10 pip drawdown, right? But you understand that your stop loss would have been about 20 pips, 20, 25 pips at the bottom of these candles. You're risking 26 pips for at least 50. Honestly, almost 55. That's at least a 2-to-1 ratio, and that's very beneficial to anybody, okay? But you understand, breakout, retest, you're going to have some drawdown, and then you go to the upside. That's how you use support and resistance, okay? That's how, that's just a little sauce that I wanted to put in here, talking about consolidation, because that's how a lot of plays happen, right? Right here, it's consolidation. This right here, consolidation. What happened? We finally had the breakout. All right. They came back into this zone, resulting in what? More consolidation. Before it fell to the downside, retested twice, and dropped off for the next day and a half. And just kept going. And kept going. Right? Consolidation right here. Supply and demand zones. This is a resistance. This is the support. You're waiting for the breakout. What happened? You had your retest, continuation to the downside. And you see the market respects supply, support, and resistance areas. This is a support. What did it do? Come to the support, overlapped. But what do you see here? Another supply and demand zone. Came into another supply and demand zone, retested the previous one, and then continued down. Remember, the larger time frame ones hold more weight than the smaller time frames. All right. Larger time frame is going to hold more weight than the smaller time frame. Remember that. And that's pretty much all I have for SRT, right? You understand support and resistance. You understand how to draw support and resistance. You understand supply and demand zones. You understand trend lines, uptrend, downtrend, consolidation. And you understand how to pair both together, all right? The next step that y'all need to look into is called Candlestick Patterns, all right? If you're a part of I Am Academy, especially a part of Royal Circle or my team, you will have access to the Candlestick Bible. The Candlestick Bible will give you all the candlestick patterns that you need to know, okay? There's also an app called JCP, Japanese Candlestick Patterns, okay? If you go to the App Store or Google Play, just type in JCP and download that app, all right? It works the same way, all right? Other than that, that is all I have for this training. I appreciate y'all who take the time to watch this video and understand SRT a little bit better. Like I said, this is the foundation to a lot of trading strategies. If you don't know how to find SRT, you don't know how to find consolidation, and to start identifying levels, it's going to make a difference when it comes to you applying a strategy. If you use DeLorean, part of DeLorean is understanding support and resistance, because if you have a type 2 trade, you got to know how to find a support and resistance label for your take profit. If you use the harmonic scanner, if you use the alligator strategy, if you use the harmonic scanner is just a bunch of support and resistance levels that's used as take profit and stop loss. You just have an algorithm that does it for you, right? If you were to mainly go to harmonic scanner and mark out your own support and resistance on that time frame, you'll see that your lines were marked up to the take profits and stop loss lines that the harmonic scanner gives you, all right? This is the fundamentals of any type of strategy that you're going to learn, and you need to master this before you do anything else. All right. I appreciate y'all for watching this, and I hope to see y'all on my next video.